Hi everyone, thanks for checking in. It's Adam Copen here at Low & Co, and as usual we're going to look at the Wellington real estate data, spot the trends. We're looking at February 2026 and comparing it to the last couple of years. So in summary folks, the tough market conditions do continue, but the values have bounced. So it's a bit odd, to be honest with you. The Real Estate Institute House Price Index shows a significant sort of a bounce up in underlying values in Wellington for the month of February. Now, obviously, that's great news for those of you who are looking to sell. Is it real, though? That's the question I'm asking, because if you look at all the other underlying data points, all the other facts sort of point to a continuing weak market. So, is this a strange one-off, or is it the start of a new trend? Obviously, only time will tell. I hate to be negative, but I have my doubts because all the underlying data does sort of suggest weakness. So message to sellers is that the fundamentals do remain weak out there. It's pretty tough going. Buyers, me and my colleagues, we continue to hear buyers complaining there's not enough choice out there. Well, I've got news for you. There's more choice than we've seen for 11 years. So if you're waiting for things to get better, please don't. This is the best it's been for a very, very long time. So let's get into the data. Median sale price, $805,800 in February 2026 versus $77.95 a year ago. So ever so slightly higher. If you look at the blue bar chart there, you'll see that February number at just over 800 is the highest we've seen for quite some time, and compared to January, it was significantly lower, so it's a big increase in that sort of month to month. Now, firstly, the median sale price is not the best guide to underlying values, which of course is what we are mostly interested in. The overall trend is instructive though. So the red line, I would suggest, is what you should focus on in this graph, not the blue chart. And that shows that, very broadly speaking, values of median sale prices rather have continued to go sideways, roughly speaking, over the last 4 years or so, or just over 4 years now. But there's no question that since January 2024, so just over 2 years now, prices have been ever so slightly drifting downwards, but then a tick up in the last month. So let's see if that's just a one-off or the start of a new trend. The better guide to underlying values, if you follow these videos, you'll know that my opinion is that is seen by looking at the Real Estate Institute House Price Index. So let's look at that now, and we'll start here with the league tables. This shows how much movement has there been in the various markets since the peak of the market. And Wellington has, for the longest time, been the leader, if you like, in that we've fallen furthest than any other market. And at down 25.3% to the end of February, that's still the biggest loss. Wellington is still the biggest loser in that regard, but interestingly, as of the last month or two, the number got to negative 27 or 28 over the last few months. So down 25.3 is less bad than it has been for a while. Auckland down by 21.4, so not far behind us. The rest of the country, though, has fallen significantly less. So certainly has been during this slowdown period since the peak and the decline in nominal values. Wellington and Auckland cities have been the softest market. There's no question about that. Over the last year, Wellington also has fallen further than anywhere else. Much smaller numbers, of course, 2.9% versus 1.1% for Auckland, and overall flat for the whole country. But over the last few months, a slightly different picture. And so Wellington, we have enjoyed a little bit of an uplift there, whereas various other parts of the country haven't seen the same uplift, and some indeed are still falling, as you can see in the graph there. For example, Northland and Manawatu in particular. So the real question is this a one-off? Is this just a data blip? Or is this the start of a new trend? We can try and look at the underlying fundamentals and all the other data points to get a sense of that, but obviously only time will tell. So looking at the data another way, you can see there, look, there's the graph of the house price index itself. The blue line is the Wellington region, the orange line is the Wellington city, and you can see right at the end there, a distinct sort of mark upwards, and you can see by looking at those 1 month results across the different territorial authorities, all of them in positive territory. So really quite interesting. So very consistent in that regard. I mean, Porirua City though, 6.5% increase in values in 1 month seems unlikely. Wellington City 2%, Lower Hutt 3.6%, and so it goes on. But the trend is interesting. Every territorial authority is in positive territory. So as I say, let's see if this persists. You see there the graph of the Wellington region house price index. Again, you see that distinct step up in the last month. Now, it has done that before. We have seen a step up, and then the following month it's straight back down again. So this is not conclusive by any means. Only time will tell. Over the last year, generally weakness across the board, ranging from 4.7% down for Upper Hutt through to the standout there again is Porirua, 4.2% up for the year. Over the last, Wellington City shows the same overall trend. You can see in the charts there, it is more of a sawtooth. It's a bit more erratic, but the trend is very similar in that the last month we've seen a big step up, 2% in Wellington City. Interestingly, you look at that, over the last 5 years on average, a loss of value of 4.5% per annum for the last 5 years. So it certainly has been tough times. What about new listings? Number of new listings coming to the market, and this of course is what buyers are interested in. What's the new stock that we've got to choose from this week or this month? In February, 968 new listings in Wellington region versus 939 a year ago, 927 2 years ago, so 3% and 4% up respectively. So look, not big increases in the amount of new stock coming to the market compared to the last couple of Februaries, but nonetheless increases nonetheless rather than decreases. So, and again, you look at that red bar, that red line, you can see it's trending up over the last 6 months, and in particular that's a very busy February. You look at the blue bar chart there, it's been quite some time since we've seen that number of new listings coming to market in a month. And at 968 compared to what's normal for February of 871, the amount of supply coming to the market in the month was significantly higher than what we normally see. So again, that's wonderful for buyers, not so wonderful for sellers. As a seller, of course, you have one listing on the market typically, and what you want to know is, or what you're wanting to achieve rather, is attracting the attention of the buyers in the market, getting them to come to your property. When there are that many new listings out there, it's just that much harder to get the buyers to pay attention to your place and come and attend the open home. Number of new sales on the other hand, and this is unfortunately going the other way. So again, not a good story for those of you looking to sell. 597 new sales in February versus 635 a year ago, 688 2 years ago. So 6% down on a year ago, 13% down on 2 years ago. Again, look at that red line. That's the 6-month moving average. Since we hit the real lows coming off the back of the turnaround and the decline in values there since kind of early 2023, we've seen reasonably consistent, pretty gradual but consistent increases in the volume of sales that we're achieving in the market. But over the last 12 or 18 months or so, we sort of seem to hit a plateau, and then over the last 6 months it has been slowly declining. So again, not great news for sellers. And if you look at February this month versus what's normal for February, 597 versus the norm of 709. So whereas the number of new listings coming to the market has been higher than what's normal for the month, the number of sales taking place lower than what's normal for the month. So these two fundamental drivers, new supply versus sales being kind of a proxy for demand, is not spelling overall good news for sellers. So it's a little bit flying in the face of how can you have those fundamentals and yet increasing values. It does seem counterintuitive. So again, you see this number of sales in the month versus 12 months ago. For about 2 years, we've been consistently achieving higher number of sales, more sales than a year ago, but the last few months we've just dipped down below the x-axis there, as you can see from the red line. So again, contracting levels of sales, not good news overall for sellers. What about days to sell? How long has it taken to sell a property? Really, really a long time, and it has been consistently increasing again for the last 2 or 3 years. So 60 days in February to sell a property versus 45 February 25 and 40 February 2024. So big increases in the length of time it's taken to sell compared to a year and 2 years ago. So you can see, look, compared to January, January is typically a very long month to sell. February is not, and February didn't come down that much compared to January. It's been a long time since we've seen this duration to sell overall in a month like February in Wellington. So again, not great news for sellers. Again, look at that red line. You can see a very clear theme there, increasing trend, increasing duration to sell properties for the last 2 to 3 years. It is taking a long time for sure. What about amount of inventory? This is how long would it take to sell everything that's on the market today if everything continued to sell at the same rate until everything was gone. How many weeks worth of supply do we have on the market? 15.3 versus 14.7 a year ago, 13 2 years ago. So increasing, but only very gradually. And interestingly, compared to the long-term average, which is 15 weeks, one could conclude that the market is a normal market compared to what the long-term norm is. But it certainly doesn't feel like a normal market, and perhaps one reason for that is that over the last 10 years, the average inventory has been just over 10 weeks versus the current 15. So it certainly feels like a lot of supply compared to what we're used to in the last 10 years. And the same sort of theme is carrying on in trade me listings, 3,586 as of a couple of days ago when I'm recording this, versus 3,420 a year ago, 2923 2 years ago, 5% more than a year ago, 23% more than 2 years ago. Again, look at that chart. You can see it quite clearly in the blue bar chart. This is more supply on the market today than we have seen since April 2015. So as I said at the top, if you're a buyer and you're out there and you're thinking there's not much to choose from, please, I understand there's never enough of what you're looking for. It always seems like you want more and you're looking for that unicorn property. But compared to what's normal, the conditions out there for you guys are absolutely remarkable. You've got more choice than you've had for 11 years. Please don't wait for things to get better. So in summary, folks, values have drifted down generally over the last 12 months. But up in the last 3 months, mainly dragged up by that one sort of big spike that we've seen in the last month of February. So let's see if that continues or if it's a bit of a data blip. New listings have been heading upwards and well above February norms. Sales volume, on the other hand, have been drifting downwards and are significantly below February norms. Inventory is at normal long-term levels, but well above what we have seen as normal in the last 10 years or so. Trade me listings are slightly up versus a year ago, and we are at the highest level we've seen since April 2015. So the message to sellers is that the fundamentals, unfortunately, have remained weak, are remaining weak, although values have bounced in the last month. So let's see if that continues. And message to buyers, of course, is huge choice. Please don't wait for things to get better. Get amongst it. It's unlikely you'll see buying conditions better than now. Thanks for checking in, and thanks, of course, to Real Estate Institute and realestate.co for the data I use for this. If you want individualised advice, please reach out. It's Adam here at Loan Co. Thanks for checking in. See you next time.